I'm going to show you how I use the exact same concept over and over and over again. So you guys wanted me to drop the deets on the EURUSD trade that I was in the other day. I put out a whole post on it and said, like the post if you want me to drop the deets on this, and you guys came back with 100 likes. This is the trade that I'm going to be talking about today. You can see it on the screen. I'm going to be breaking it down for you guys, just telling you guys what my thought process was behind it. Put my annotations on. There we go. And really and truly, you don't have to worry about this stuff. Don't need to worry about all of this. You know, we're not looking at that. I started the video, then just remember that to also mention this too. I'm also going to give you guys a second trade, the EURUSD trade that I was in from London today. I also post on Instagram, so go ahead to my Instagram, MHU_effects. You can see the post there, and I might post it in the community tab too. So I'm going to give you guys two. So it's a 2-for-1 today. And so you guys have to stick around from the beginning to the end. And I'm going to show you how I use the exact same concept over and over and over again. My annotations are on now. Like I said, you can forget about this. Forget about that. This line represents a new week. This was last week. And then this line represents a new week. And then this line here is just the Friday. So I've just taken a bit off the chart now. Don't forget, this is for educational purposes. This is why I'm on this mode at the moment. Generally, throughout the week, if price has been rallying higher, then on Thursday and Friday, I expect some kind of profit taking. And so what that would look like is something like this. So let's just look at this week here. So Monday comes in here, we begin to push up. And then on Thursday and Friday, I expect profit taking. Obviously, I don't expect it to be this big. And so what I mean by that is that those who are buying EURUSD, they're now going to close off their order. They're going to sell their position back. And this is generally what tends to happen. There'll be a bit of a drop off when they do so. This obviously was really extreme. I didn't expect it to be this huge, but it happened anyway. So that was the Thursday, Friday. And so using that same principle, this is not even the concept I'm even talking about, but using that same kind of logic, I'm also going to be expecting the same thing to happen here. We open up for the week, we've expanded higher, we've dropped. It's now Thursday and Friday. I'm going to be expecting some kind of profit taking for this week. And so exactly the same way we profit took here. Not necessarily this huge one, but this is what I'll anticipate to happen here. Let's just go down to the 15-minute time frame. I will come back to the 1-hour time frame. I told my mentees the moment this gets above this high, then this thing should really just rise. And so really and truly, it was just to get some kind of potential entry to then take it higher and take it into these highs. And now check this out. Here, Thursday, I believe this was Thursday, they accumulated, then they manipulated the highs. This is more that protraction, then we drop. So in other words, it's enticing people to get into the trade, but the real agenda is to drop. This is now Friday, same thing here. We're getting that sideways action. We want price to drop. And so what do we see here? That's also going to let us know that price is going to drop. We see relative equal lows right here, relative equal lows. If I can get this thing to behave, there we go, relative equal lows. So we know that there's going to be people looking to jump in with early trades to take price higher. So whenever I see something like this, yes, you know what, it's so crazy because when I see something like this, when I'm looking for price to be bullish and I see equal lows, I'm always expecting price to run out the lows, and I always look to the left to see what else can it run out. So what else is it reaching for? Because whenever they're running out liquidity, they're always reaching for something, especially equal lows and equal highs. And so the only thing you can see here is this low. There is nothing else that they're reaching for. These equal lows are within this imbalance here. And it's not even like this imbalance was something I was looking at. I was looking at liquidity, which is this low. And I'm using this because this was the only thing that price could potentially reach for. If there was a down close candle somewhere here, I would have used that. But it wasn't. This is why I used this low here. And what I did, I just marked up 10 pips between this low here and the very lowest point. Then I was expecting a reversal within that range. Now I'm going to go ahead and hit play. I was on the 1-minute time frame, so I'm going to show you that, but I just want price to get down to this level real quick, and then I'm going to go down to the 1-minute time frame. Okay, cool. We've ran out the previous week's low, so we are running out liquidity. Not only we ran out this liquidity, we also ran out the previous week's low. And it's a Friday, price has been rallying lower, and we want to see some kind of profit taking place. Please don't forget my 50-minute high. This is my 50-minute high. When it gets through here, price should just literally burst up. That's my 15-minute high. Just before this, I've already eyed up that above these highs is another triple highs. So let's go ahead and mark that up too, because price shouldn't just stop here. It should run out the liquidity above this high too. So in my eyes, they've run out that liquidity beneath now. Where's the opposing liquidity is going to be to the upside. This is where now I'm looking for a turnaround. And before I even move on to the next bit, you can't be greedy. You just can't be greedy. There's going to be various different liquidity points. And how do you know which one is going to go to? So this is exactly how I play it. And I want you guys to take notes. Take notes because this is going to be really helpful. So what I will do then is It's a no-brainer they're going to run through this high, because this is the high that we need it to run through for it to really push up. This is going to get run through as well. They're taking the lows. It's just the top left, that liquidity on the buy side. We also have this high here. We have this high here, this high here, and that one too. And there's more to the left. But then this is what I did. High to low, like this. And I looked at where equilibrium was, which is here, 50%. Where my trade was going to end was 50%. But someone mentioned the other day, why don't you just let the whole thing ride? That's not my trading style. I like to run liquidity, take partials, let the rest ride. I don't care how many pips is left. And that's my mindset. That's instilled within me. It's not changing for nobody. You know, you can hold a whole position and run it then if you wanted to, but that's your trading style. I've done that multiple times, but there's times when I hold in a full position and then price turns around and hits my stop profit, or price will turn around and begin to go back on me. Quick plug in the video, I am doing a massive summer discount on lifetime mentorship, guys. If you want to get involved in that and find out a bit more, go ahead and check the information at the top of the description. Let's get back to the video. This is where I was looking to end the trade, and what I was going to do is, if price got above this high here, then I was going to take partial profits and then let the rest of the trade ride. Let's go to the 1 minute time frame. I need to make sure, there we go. This is that line that represents the previous week's low. We're trading beneath it now, so let's just quickly show you that real quick. You can see previous week's low. Let's just see, where's my, there it is, previous week's low. There we go. So we're trading within this range now. We've dropped how many pips beneath that previous week's low? Let's just go ahead and double check it. This low to that low, we're talking about a 9 pip range. So this is why I want to see price turn around in. But what am I waiting on? When price is getting beneath this low, price is making lower lows, lower highs, right? Let's zoom in, lower highs, lower lows again, and this time it makes a high. So it takes out this high. The moment it takes out this high, price drops down to this down close candle. This is exactly where I'm looking to take my trade from and take it to that very highest point. So I ended up jumping in roughly about 37 something. And then what I did, put my stop loss beneath this low. And that's the whole point of trading these 1 minute time frames, guys. It's the whole point. I could have traded a much higher time frame and my stop loss could have been a lot bigger. But because I'm trading these 1 minute time frames, I'm able to get smaller stop losses to get to our level here. 37.5 pips. But this is a 1 to 12 hour trade. But don't forget, this is not where we end the trade. This is where I'm looking to take off 80% of the trade, because it's Friday. The week is nearly done. I'm not looking to do the most. I'm not looking to do much. Let's go up the time frame now. But yes, there's liquidity above this high and all these different highs. But you can't be greedy. You have to play it smart, trade it well. I had my final destination up here, and I had my first TP area right here. And don't forget what I said here. This is my 15-minute high. When price gets above that, in other words, we should fly, run out liquidity, and keep pushing higher. This is not a stop out. It didn't come to my eyes. Let's go to 1 minute time frame. You see it came close. It didn't come and stop me out. And that's how you guys saw me in the trade right here. It didn't even get to this low over here. You can see, boom. And this is why you don't move stop losses early, because this is what's most likely to happen. Let's go back up to 15. And now you can see, look at this. When price ran out this high, then look, it exploded to the upside. This is where I took my first TP here, and then I let the rest ride to get to my second area of interest right up here. So that trade was beautiful. That was good. So that was how I caught it. After we had taken TB, basically, there's a little more of a push up, and then look, we got that sideways action to finish off the week. Guys, we're going to go on to the trade today. You guys can see on EURUSD, I've gotten to a buy for EURUSD, and this is exactly what I saw and why I was able to jump in on today's trade for EURUSD. For the last week's Friday's trade, we used the concept of institutional candles. We're going to use the exact same concept of institutional candles again. By the time I wake up in the morning, I can see prices dropping. And so what do I identify? This is now a down close candle on the 1 hour time frame. From this very high to this very low, that's a whole down close candle. We ran out liquidity and then we expanded higher. The fact that we got above this high made this downward move an institutional candle or an institutional play. And so in my eyes then is when price gets back down into this down close candle, this is where I'm looking for price to push off from. I'm going to go ahead and mark out the very highest wick to the body and expand it out to the right. So now I've got my area of interest for where I want to see price turn around. Let's just change the colors real quick. So this is my area of interest for where I want to see price push off from. Let's go forward once. There we go. So the next candlestick, or should I say the next hour, because we're on a 1 hour time frame, this is when price gets into my POI. It gets into my point of interest. Don't forget, this is where I want to see price turn around. Not only we use the last down close candle here to catch this move here, okay? The last down close candle on the 1 minute time frame, you guys saw that. We've dropped down into a higher time frame last down close candle now here, high to low. And now I'm looking for the exact same play here. Go down to the 1 minute time frame. Okay guys, so I've dropped down to the 1 minute time frame now that we are in my point of interest. Don't forget, this gray shaded area is the high and open of my down close candle in the 1 hour time frame. Now I've seen that going on, I decided to get active down here. Now price is in my down close candle, the same one from Friday. I decided to get active when price gets to around 50%. So I got in roughly about 1.07, 1.0872, and I put my stop loss beneath this gray shaded area. My targets are going to be the intraday highs, so that I can expand it all the way up. There we go. And then Friday's highs. But once again, I'm going to do the exact same thing. The moment price gets up into here, I'm taking partials, and then I'm going to let the rest of that trade ride to get above this high here. Let's go down to the 15, because I'm going to show you something again. Don't forget, I'm still using that same institutional candle concept, just like how when price reversed down here and did it on the 1 minute, I'm looking at price doing the same thing, but on the higher time frame. So this is that 1 hour. Once again, this is that 1 hour down close candle. I'm using the exact same concept. So what happens on a 1 minute time frame also happens on every single time frame. It's not specific to a time frame. It's just that on a 1 minute time frame, you're going to see them a lot quicker, a lot sooner. It's going to happen more often. Whereas the higher time frame, it happens less often and takes a lot longer. Now, on a 50-minute time frame, if I hit play, you can see what happens. There we go. Price begins to push up. Comes back to thereabouts entry. So what I want to do, I want to stop it here quickly. Oh, let's stop. There we go. Stop it here quickly. I'm going to delete this line and go down to the, let's go down to the 15-minute time frame or so, or 5-minute time frame. Just to show you guys again that this happens non-stop. Now look at this. Look at this time frame. Here, we're on a 5-minute time frame. We have a down close candle all here. We rally higher. We come back into it, and then it takes off again. So you've seen how it keeps coming back down into institutional candles. This could have been another entry. It's just that I was already in from here, so there was no point of me trying to get in here. So this is the beauty of trading institutional candles.